We have seen a seventh straight day of gains in the crude oil prices. It's trading at a 3-week highs. And even after that, more than 2% gains overnight, we are trading 0.5% on the higher side even now. So 59 is back when it comes to the Brent crude oil prices. The China coronavirus, new cases have continued to decline. So that perhaps is supportive. And then it also has been about concerns in Libya, the sanctions on Rosneft, a subsidiary arm of that. And the markets also are looking at the China stimulus measures that seem to be supporting the crude prices as well. But how much is this rally sustainable? Are we done with the losses behind us? To discuss that and more, we are now joined by Peter McGuire, CEO at Exim Australia. Peter, hi. First of all, on China itself, well, yes, the coronavirus numbers seem to be declining now, and China continues to dole out more stimulus measures. How have you seen the impact of all of that on crude prices? Would you say that the worst is behind?
Well, good afternoon, Manisha. No, I don't necessarily think the worst is behind us, because I feel as though that it seems to be getting more momentum with other countries starting to develop cases, and that was demonstrated with those unfortunate 2 deaths in Iran earlier today. So it's far from over, and that's from a holistic view. And then you've got the market certainly was probably oversold as it bounced off that 48.50 number. US dollar went up in tandem and it bought up crude. So maybe the demand destruction numbers, and maybe it's just a little bit of a whipsaw effect. I think that it's certainly a market to trade at the moment, but you've just got to be very careful as far as your stops.
Well, yes, it's a trader's market, clearly. But you know what? The concerns coming in from Libya, the expectation that OPEC in its meeting in Vienna on 6th of March could come out with further or deeper cuts. How are you looking at a couple of these fundamentals?
Well, I think that's going to be the case. I've got my name down for that meeting, so I could be getting over there to have a look at it in Vienna. I feel as though that when you're seeing those sort of numbers in the uncertainty with OPEC Plus and that concern as far as Venezuela and Libya, then that could be the trade-off. So it's bounced. There's no doubting that. Let's see what happens over the next matter of days. The prelim to the interview, you said it's up the last 7 trading sessions, or approximately. It's been a one-way ticket. So, as you know, I think you'll probably see a little bit of profit taking, and I wouldn't be surprised to see a buck or two being slashed from it.
Peter, so what is your sense on where are the crude prices headed from here? Do you see further gains now coming in? How would you watch out for the US weekly inventory data today in the evening? Because that could be a bit of a bearish, that could have a bearish impact on the prices. But given the slew of fundamentals that we are dealing with and events and numbers, what is the range that you're putting out for crude?
Well, I think it would have to be that, that 52 to say 54, 54.50 sort of WTI. And if you're looking at the Brent number, well, it's naturally, the difference between the two. So it'll go up maybe another $1 or $2 from here. And also, and I think it's just been that wonderful, that US dollar strength. It's carried a lot of these markets up, which is a little bit strange, but it just seems to be, they're all in tandem at the moment. So I feel as though that you will get some form of correction in the short term. I still believe that there's probably a couple of dollars to be stripped out of it from a profit-taking perspective. Don't know when, but I wouldn't be surprised over the next couple of days.
Okay, one final word, and this one clearly has to be on gold, Peter. And we've seen all-time highs in the Indian markets, 7-year highs in the global markets, all-time highs for gold in euro and Japanese yen. What is the road ahead here?
All-time highs in Australian dollars too.
Okay.
I mean, it's just extraordinary. So, look, you've been around a long time with it, Manisha. You see what it's done in the last matter of months. It's been a very, very, very solid uptick. If you put your mind back on that 52-week range, it's gone from 1265 or 1266 to 1612. I mean, they're huge numbers when you're looking at it. So let's not kid ourselves that I think there's further upside. The fear factor is in. You've got the US dollar, the worst house in the best street, or the best house in the worst street, I should say. So I wouldn't be surprised to see triple numbers on that US dollar index, even a 101.5 by end of month. So that continued uptick for US dollar, continue uptick for gold, and the uncertainty with the coronavirus wrapped all together, gold's been a great trade.